Hey guys, welcome back. Week 7. So this is a lecture involving chapters 18 and 30, and it talks about payout policy and short-term financial planning. So chapter 18 is really dealing with more of the payout policy, and chapter 30 is short-term financial planning. So payout policy is really the firm's strategy for returning profits to the shareholders, primarily through cash dividends or share repurchases. So payout decisions reflect management's judgment about business strength, future opportunities, and investor preferences. Cash dividends are direct cash payments to shareholders, typically paid quarterly. So if you have a stock, certain stocks will pay cash dividends. Those kind of stocks are valuable. Sometimes you roll them over and reinvest the profits back into a new company or back into the company, and you don't take the cash. That's one way of doing it. But otherwise, you could continue to build these cash dividends or paying stocks. You just keep acquiring them over time. And then at some point, you just start to sit back and collect checks every quarter, every year, however they're issued. And so there's different regular dividends. These are paid on a schedule. Special dividends are one-time payouts, maybe after an asset sale. So for example, a company earns $3 per share and pays $1.50 dividends. That's 50% payout ratio. And but the dividend payout ratio you'd figure out by putting your dividends over your earnings, and it really helps assess how much profit is being returned versus reinvested. There's also dividend policy trends. In recent decades, share repurchases have become more popular, and companies favor flexible payout methods tied to earnings volatility. So, stock repurchases, a company buys back its own stock from shareholders. The motive for doing that would be return the cash without committing to recurring payments, or you could use it to increase earnings per share. The offset dilution, or it could offset dilution from a stock-based compensation as well. Does this payout policy matter? In a perfect market, the dividend policy is irrelevant. It doesn't really affect firm value, but in the real world, payout choices do matter because of taxes, transaction costs, investor preferences, and signaling. There's the clientele effect. So different investors prefer different payout policies. So retirees may prefer stable dividends, and high-income investors may prefer capital gains because they're a lower tax rate. The signaling theory, so the dividend increases may signal strength. Cuts may signal trouble. Because management has more information, payout decisions can influence the stock price. So you think about the way that you do things. People are always watching, and Proverbs 13 says, "Dishonest money dwindles away, but whoever gathers money little by little will end up making it grow." So Christian business leaders should weigh the short-term satisfaction versus long-term stewardship in their decisions for payout policy. We get chapter 30. This is short-term financial planning. This is working capital management, the management of a firm's short-term assets and liabilities in order to ensure liquidity. So key components will be cash, accounts receivable, inventory, and accounts payable. But the objective is to avoid the cash shortfalls while minimizing idle assets. A cash budget is a forecast of cash inflows and outflows over a period of time. This really helps anticipate shortages, plan borrowing or investing excess cash. When we're looking at net working capital, this would be taking your current assets minus your current liabilities. When you have a positive net working capital, you're more liquid, but that means cash is more available. And negative in net working capital would be liquidity issues or aggressive working capital strategies could cause that. There's the operating cycle versus the cash conversion cycle. The operating cycle is the time from the inventory when it's first purchased all the way back until cash is received from the customer. But a cash conversion cycle is the time between paying suppliers and collecting from customers. So a little nuanced, a little different. So when we are talking about the cash conversion cycle, um, that would really be your inventory period plus your receivables period minus your payables period. The shorter the cash conversion cycle, the better the cash flow. Short-term financing sources. So there's trade credit, which is from suppliers, and there's bank lines of credit, which you can get a line of credit from a bank. Commercial paper is another short-term debt that's issued by corporations. Each has their own trade-offs in terms of cost, speed, or risk, but those are all different sources of short-term financing. There is the credit policy. This is how the firm's rules are on how much credit to extend and to who. You're going to look at your different vendors that are coming in. Do you give them credit or not? Or customers that are coming in, do you give them credit or not? And but this can affect sales and bad debt and cash flow. So it's important on who you're lending credit to. It must balance between sales growth and liquidity risk. There's also financial flexibility. This is something you need in order to have the ability to respond quickly to cash needs without disrupting operations. Sometimes you have to maintain reserves or diversify financing options. Maybe you need a line of credit because sometimes that cash conversion cycle is a little longer than you want it to be, and payroll's got to go out the door, and you need a source to get to that payroll. You also need good banking relationships, and all of that's important. So ultimately, when we're talking about credit, um, Luke 16 says, whoever can be trusted with very little can also be trusted with very much. And when you're talking about managing small day-to-day finances well, this really builds trust and helps lay a foundation for larger responsibilities. So I hope all of this has been helpful. Again, if you have any questions, you want to reach out, talk more in depth on any of this stuff, let me know. I'm always here to help. Hope you guys have a great week, and I have really enjoyed having you guys in class. Do well this week, do well on your final. You guys are on your way, and if you ever need anything from me, I am always here to help, even past the class. Never hesitate to reach out. Talk to you guys later. Praying for you. God bless.